Today was a sell climax on the open, and then we got a weak bull channel up the remainder of the day. If you think about it, when you see bar, 7, 8, or whatever, it becomes, you can't do this all day, right? The market's not going to go down this deeply all day. It's extremely, extremely rare for that to happen. So you have to be thinking that, we might get some sort of reversal attempt, and when we do, bar 9, it's a reasonable Walmart trade. Just buy above 9, put your limit order above 1 and your stop down here, and you just go do something else for a couple hours and see what happens. And usually, the reversal up is not going to be super sharp. It's going to be more of a sideways to up reversal, so a bull channel. Generally, when you get a sell climax in the open and then a rally, the market is going to have a tough time getting far above the prior day's high. So it was hard to buy up here because you know that we're probably coming back down to the high of the day. A couple other examples I have. Not in this one. I had one other one. This one's just today. This, we get a climax in the open and then just a weak channel up, not far above the prior day's high. A lot of these aren't very good examples because they're from a while ago, and it's hard to, I wasn't as good at, categorizing things. But you see sell climax in the open, weak channel up. But you get the point, right? So, bar 1, a big bear bar closing near its low. One of my thoughts on the day was that we were going to have to go below yesterday's low, but that we would probably find buyers. Why was that my thought? Because of the daily chart, right? When you see this bar right here, pretend you couldn't see today. Are you going to sell below this bar thinking you're going to get a bunch of follow through? Probably not, but it is still a sell signal bar. So I thought we would probably end up having to test it, test the low at some point today. And with a bar like this, I thought, we're around the low of a buy climax, so we're probably going to find buyers somewhere in here. So if we do go below yesterday's low, we probably won't go very far below yesterday's low. So bar 1, a bear bar closing near its low. It's a reasonable sell to close bar, betting for a second leg down from yesterday and to get to the, yesterday's low, which I thought was the target. Bar 2, follow through for the bears, but a tail on the bottom. It's not a huge bar, but it's okay to, I think, be short right now. Follow through more on bar 3, but a big tail on the top and a big tail on the bottom. So probably going to pull back here soon. Because of that, you can see we have shrinking bodies and increasing tail size, so probably going to pull back soon. When you think of the word probably or usually, whenever in your mind you say you do something and you think of the word probably or usually, you should immediately think 60% chance. So if you're taking a trade, you think this will probably work, 60% chance. Just use that as your math. And if you're thinking this, this is probably not going to work, then think 40% chance. And if you're just thinking, well, this is just basically a donation, then maybe 20 to 30% chance, things like that. So, that's basically using your trading instinct to try and assess probabilities, which is, one of the things that's really hard to do. Big bear bar, bar 4. It's a breakout kind of below this channel line that we established 2-3. And so, a climactic looking bar. Bear's trying for a new breakout, but again, probably going to pull back soon here. And that's what happens on 5. You get a big bar like this, a lot of traders just take profits, and that causes bar 5. Bar 6, I thought the math was pretty interesting on it. 5 points. So you're risking 5 points and you're trying to get a vacuum test basically of yesterday's low for, 17, 18 points. So getting about 3-to-1 risk reward and with maybe a 40% probability, I thought pretty okay to take a sell below 6 and just take a chance that we went down to the low today. Followed through on 7, but a big tail. So not quite as good as it could be. And then an even bigger bar on 8. 8 is extremely climactic, and it got to the target, which was yesterday's low. So with that in mind, I think most traders are going to probably end up taking profits pretty soon here, and we're going to get some sort of bounce. And the bounce we got was bar 9. 9, like I mentioned earlier, a reasonable Walmart trade. Buy above 9, put a stop below. I'll call some Walmart trades. Call it whatever you want. I usually just watch TV or do something else. I don't usually leave the house when I, take that kind of trade. But anyways, bar 9, a reasonable buy. Put a limit order at the high of the day, put a stop order below the low of the day, and just walk away for a couple hours and see what you get. 10, a tail on the top, but a reasonable follow-through bar. We're probably going to get a pullback before we end up rallying, and then you get a surprise bar up on 11. When you see 11, you have to be thinking, oftentimes what happens is when everyone wants to buy, but everyone wants to buy a pullback, right? No one really quite wants to buy above 11. But what will sometimes happen is if everybody's looking to buy a pullback, too many traders will front run the trade and you'll end up getting a rally. And if that's going to happen, 12 would have probably been a better follow through bar. And if 12 wasn't a better follow through bar, 13 definitely would have been a better follow through bar if something like that's going to happen. So 12, a doji bar, and then 13, disappointing follow through. But now it's a parabolic wedge on a lower time frame. You can see we have one leg up 9, pause on 10, a big leg up, 11, pause on 12, and then another leg up 13. You can think of it as pauses between climaxes. 9 and 11 are by climaxes, and then an obvious doji, which is signaling trading range after 12. So 13 makes the third leg up, some sort of parabolic wedge on a lower time frame. And once you see 13 with the big tail on the top, I think a lot of traders start to give up on the idea that we're just going to rally straight up here. And they know that they're probably going to be able to buy lower. So that's why we get the disappointment bar 14. More follow through for the bears on 15. Again, disappointing if you're a bull to see 15. But if you were still long after the 3 legs up, you probably knew that something like this was going to happen. It was a parabolic wedge to 13 on a lower time frame, so you have to be expecting 2 legs sideways to down. 16, a big bull bar closing near its high, but a big tail on the top on a flat moving average. I think hard to take a trade here. And then inside bar 17, bull surprise bar on 18. So 17, double top bear flag, I suppose, or you could say lower high, second leg down, but it never triggers. So bulls, big bull bar 18, and inside bar high 1, 19. Are you buying above 19? I think hard to buy above a doji when you're this high in a probable trading range. It's a pretty tight channel up, so it's probably going to get a second leg, even if we do go sideways to down. 20, a big bull bar closing near its high. Good for the bulls, but you can see we're right at the 1 low, which is going to be resistance. What are the odds that we vacuum straight up to the 1 high? Maybe 40% if you're buying above 21 or above 20, but you never get filled. You never get filled buying above 20. So 21, disappointing bar, and then 22, a bear bar closing near its low. Maybe an okay sell below 22 for a swing, but we're probably going to start to go sideways here pretty soon. Something else to note is we have not broken out of the 18 bar range yet today. And we're pretty in the middle of the 18 bar range. So traders, when we start to get a little too low in the 18 bar range, they're going to be looking to buy reversals up with good math to the high. If we get a little too high, they're going to look to sell reversals down with good math to get to the low. So traders, we're in a trading range in the middle of the 18 bar range, really just forming a triangle. And traders are waiting for the breakout to trade in either direction. 23, a bear bar, but not the best follow through with tails on both sides. We might get a pullback to the most recent buy climax low, which is probably the 18 low. And then a big bear bar closing near its low 24. 4 straight bear closes, but 24 looks climactic and like a breakout attempt below the bar 21 through 23. And then 25, kind of a disappointing bar, big tail on the bottom, not what bears wanted to see. An inside bar on 26, it's a high 1 for the bulls after a deep pullback, but I don't think anyone wants to buy that after 5 straight bear closes and a couple of them being pretty strong. And bears, do you sell above 26? I probably wouldn't. You're selling lower in what's probably a developing trading range, the 18 low or 17 low being the start of the trading range, since that was the most recent buy climax low. So if you're selling below 26 or above 26, you're probably going to have to scale on a lot, and it could be quite difficult. It's kind of the same thing like buying above 11. It's not technically wrong, but you can't buy above 11 and then exit below 15. It's pretty counterproductive. You have to realize that if you're taking a trade like buying above 11, likely that you're going to get a pullback, maybe 60%, right? Maybe 70% that you're going to get some sort of pullback before you rally. 27, I think it's a lot of bears just exiting shorts at the market, causing the bounce, and an inside bar. 28. 29, a big bull bar closing near its high, but possibly a second leg trap. 26, 27, and then 29 towards the top of the range. I think the bulls need one more bar here on 30. I want 30 to be a big bull bar closing above the 20 high. Why the 20 high? Because the bulls who bought this close, they might be sufficiently disappointed in this that when we get to this price, they're going to sell out of their longs. So I want to see bulls buying at this price, and I want to see a close up here, which shows me that these bulls were interested in buying here. And if you can get that on 30, then I think a lot of traders will buy the market, and maybe we start the rally up to the high of the day in the breakout of the 18 bar range. Instead, you get a disappointing bar on 30, double top bear flag 30, 21, lower high, maybe 40% chance if you sell below 30, probably less, but sell below 30, you go for the measured move. Double top bear flags never look all that great, but they do work 40% of the time. Higher probability to wait for a sell like 32. You could sell 32 in its follow through, right? It could be a second leg down, and this was relatively strong, so you're not sure how much lower you're going to go, but okay to be short. I thought, still okay, sell the close 33, but you're getting pretty low in what's probably a trading range. So I'm not as positive about 33, but I think it's still okay betting on the breakout. 34, doji follow through bar. You can see the bulls, the traders who are taking these trades are pretty quick to get out. Traders who buy above 29, you can see 31 touch their entry price and they sold, and that's part of what caused 32. Or the traders who bought 29 sold out during 31. I think I said that correctly. And then 34, disappointing doji bar. So a lot of traders who sold 33, disappointed 34, getting out 35, right? So a lot of these traders who are taking these trades at the tops and bottoms of trading ranges are really, really, really quick to get out. 35, a big bull bar closing near its high. Big enough to make me think we're not going to go straight down, but I'm not sure how much we're going to go to the upside. And then you get a doji bar 36, kind of a disappointing bar. And then a bear bar 37, but a big tail on the bottom. Big reversal up for the bulls 38. It's a wedge 17, 25, and 38, but you have a flat moving average for the past 20 bars, and you're buying right near it, and there's a tail on 38. Is it a reasonable buy at 38? I think so. Betting that we've started the rally up to the high of the day, but it might not be, we might not go straight there. We might have to pull back a little bit first. Follow through 39, follow through 40, inside bar 40, high 1 for the bulls, but not as good as it could be. And then disappointment 41. I don't really think you have to get out below 41. I think if you bought, you probably knew that you were going to get some sort of pullback, so it's probably still reasonable to stay long. And then a bull bar closing near its high on 42. Do you buy above 42? I think so. You could argue it's a high 2 even because 40 was a high 1 inside bar, so you could argue 42 is a high 2 or a high 1. I think you could argue either, but either way, it's a reasonable swing buy. And then you get follow through 43, so you now have consecutive bull bars. You can buy the close 43, more follow through 44. 43 is especially good, I think, because it's a smaller bar, but it closes near its high, so it's credible follow through for 42, but it's not overwhelmingly large that it makes it difficult for traders to want to buy, and that's probably why so many traders bought it. 44, more follow through 45, but big tail and disappointment 46. I think probably bulls get out below 46. Too much, risk that we're going to get a correction down here. And then we get an outside up bar 47. 47, you can buy above the high. Again, trying to get a move up to here. And you get good follow through 48. I think you can probably buy 48. It's by the close. It's a rally, but this is really steep. And this is the target. So you have to keep in mind, you're buying 48. You're buying right at the open of the day as well in a trading range day. You can see we got a vacuum test at the open of the day, late in the day. But if you're buying above 48, you're buying the exact pretty much open of the day in a trading range day. I know it's a bull trend, but this is really strong. And so sell climax on the open, you're still thinking bull channel, but probably not huge bull rally. So you have to think we might start to go sideways soon. And something interesting happened, the 20 high, right? So traders would sell the breakout, fading the breakout basically from 45. And those traders who faded the breakout ended up getting trapped. You can see on 47. So those traders are trapped, and we ended up that trap set of traders ended up leading to a pretty solid rally. 49, a big bar closing near its low. We're probably getting back to the 48 close at some point, but this is probably good enough for 2 legs sideways to down. So I wouldn't sell below 49, but I get out longs. Disappointment 50. I wouldn't buy above 51. I think we're still probably going to get one more leg sideways to down, so I'd rather wait. And then 52, it's a double top for the Bears, but I'm not selling anything at this point. I'm only looking to buy. Follow through for the Bears 53, but a big tail on the top. A lot of overlap with 52, so not great. And then 54, a bull bar, but a big tail. And then more surprise follow through 55. Okay to buy the close 55. It closed above the 48 close, which I thought was important. And bulls are buying, trying to get a rally up to the high of the day. You can see we got follow through 56, and then we missed it by 1 tick. And if you look at SPY, so every 3 ticks on the SPY is the equivalent of 1 tick on the Emini. And if you look at the high of the day, it was 504.68, which means the market needed to get to 504.71 in order for the E-mini to get to that new high. You can see we got to 504.70. So we literally got as close as you can possibly get to triggering that. We were if it only triggered by 1 cent, it would be a little less close, but instead it triggered with 2 cents. So we were literally only 1 tick on the SPY away from getting that last tick up on 57, but too many traders were too concerned, and they ended up selling out of their longs, and you get a reversal down 57. If you buy above 55, which I thought was reasonable, you can see it's also a 21 tick trap. So 83.5, and it needed to get to 89. and it got to 88.75. So there was a lot of reasons for traders to exit at the high of the day, 5 points buying above 54 and break out of the 18 bar range. And there were so many reasons that traders exited a little below and we got 57. Disappointment 57, it's a wedge. It's probably 2 legs sideways down, but I think hard to buy. Hard to sell. And then follow through 58, but I'm not selling against a bull trend. 59, a bull bar closing near its high, and then 60 follow through. Okay, buy the close 60, but the target above is right here, so I thought hard to do. And really interesting. If you look, this is too close. If you look, there was these two bodies never overlapped, the 48 close and the 58 close. So there was an open body gap there technically, and it's shown easier on a line chart. You can see this high and that low, they touched, but they never quite overlapped, and they have to overlap by a tick in order for those traders to get out of their trade. So I thought really interesting that we that stayed open, and it makes the buy above 59.60 a bit stronger. Follow through 61, 62, big tail 62. It's a wedge channel, right? So 49, 57, 62 is a wedge. So I thought I wouldn't exit, or I wouldn't sell below 62, but I thought it was probably okay to exit long as a point or so below. And then you get a big bull bar 63, but a tail on the top, follow through 64, but again, a big tail on the top. You're trying to break out above a decently tight bull channel. It's pretty low probability. 66, an inside bar. It's possibly a 1 bar final flag. I think we're going to pull back to the high of the day because, after, this pattern is pretty set at this point, right? It's bar like 67. So the pattern for the day is pretty set. And the pattern for the day has been a sell climax on the open and then a channel up all day to the high. But the target's been reached, so I don't really think there's very much left to this. And then you get a big bull bar closing near its high 68, but biggest bull bar, probably the best looking bull bar of the whole trend, really deep in the trend, 60% chance 68 is the end of the trend. 60% chance 68 is the end of the trend. 60% chance of one more leg up, which we did get on 71. But only 40% chance buying above this that you're going to get a rally. So probably better to wait and see if 69 is that big bull bar. And it, in fact, was not that big bull bar. 69, big outside down, and then disappointing follow through 70. 71, trying to get that second leg, and 72, a double top bear flag. Not double top bear flag, a head and shoulders top. So 40% chance we get a breakout below the neckline and maybe a measured move down to here, or, even here if you're lucky. We didn't quite get there. But big follow through 73, sell the close, but too late in the day for me. And then we basically vacuum test the open of the day. It bounced and went sideways. You can see, even if you bought the close of 68, it scaled in lower. It's uncomfortable, but you were able to get out. For stop order trades, I thought you could sell 1 or 2. 6 was good. 9, 11, but tricky. Maybe 22. I thought 32 and 33 were fine. 38, 42, 43, probably by the close 44, probably okay 47, maybe 48, but problems being right on the middle, on the open of the day in a trading range day. Probably 55, 60, probably 59, but aggressive. I thought 60 was better. And that's, 72 is fine too, 73, and that's pretty much it. On the daily chart, like I said, I thought that this would get bad follow through, but it would probably have to trigger. And I kind of feel the same way about this today. I don't think, I think if we trade above today's high tomorrow, you can see we close, or the high there is basically right at 5,100, which is a big round number. I think we might trade above it and get a bit of a rally tomorrow, but ultimately I think that, any breakout above the neckline of this big double bottom is probably going to be minor. I'm just expecting a trading range for at least the next couple of days. And probably most of next week as well. Yeah.